is Friday, May 16th. Your boy, little on the downside today as far as energy level. Excuse me. But I took some pills last night. And it's not, prescription medication. It's just over the counter. It's NyQuil without the quill. And so it puts you to sleep. But yeah, I tend to wake up groggy. So I will be doing one of the great things about working for yourself here on the podcast is that I can go take a nap after this. I can do my little thing. I can go and take a nap. So it's a benefit. First off, thank you to everybody for the kind comments and 5-star rating on Spotify. The few hundred of you that actually rated it, I certainly appreciate it. Now, for the other 30,000 people that follow me and listen, I'm going to keep mentioning this. Rate me on 5 stars. I recorded a podcast with Dustin from the Picture of Wealth yesterday. This is another podcast. It's going to be about a half hour of me and him just shooting the shit. And honest to God, it was a great discussion. But here, what you do is you just follow, and I'm already following Dustin because I just did it. But what I wanted to show you is how to rate. So you go over to the show and you rate 5 stars and then submit. I heard from some people that it wasn't letting them do 5 stars, but that's simply how you do it. It's super, super simple. So if you want to rate it, again, we have 836 people. There is way more. I mean, you can take, like all in, they have what, 22,000? Let's see, the My First Millions, they have 4.8K. B2B with Brad Gerstner, they only have 652. So Investing Experts has 117. So my podcast, I know, is fairly large according to Spotify. I don't know the details of this, but again, 4.7 stars doesn't do me justice. But again, a great talk with Dustin from the Picture of Wealth, and that podcast will be out. Go over, give him a listen. Or just wait until my episode comes on. But it was good. Now, as far as yesterday goes, I guessed right. And make no mistake about it, it is simply a guess. But the feeling that I have in this market is when inflation comes down and we're going to see rate cuts. And that's exactly what we saw yesterday. It wasn't like gangbusters and, oh my God, you're going to have to do, Jerome Powell is going to have to do it. Listen, if he was the jilted ex-lover of Donald Trump, then maybe he doesn't lower interest rates. I mean, if you want to be passive aggressive and be an absolute asshole, just like a jilted ex-lover, then maybe he doesn't. But they're data dependent. Jerome Powell has navigated a perfect soft landing where nobody thought he could. And then what happens? Trump says, you know what? We're going to reorganize trade around the world. And then boom, all of a sudden you get recession fears and things like that. So is he a jilted ex-lover? He may be, because all of these guys are in these jobs for legacy. And I do think that Powell wants his legacy to be good. He was too late to actually cut rates. He was, and he's been very clear that he was too late. I like him. He was appointed by Trump. He doesn't play politics. He doesn't do a lot of political grandstanding. He absolutely deflects any political suggestion. So I enjoy Jerome Powell as my federal chair, as an independent federal chair. I do. I mean, shoot me. But I think he does a great job. So I guessed right yesterday in that the market wants to come back. And again, I think the market is in a strange place, and it feels weird. Because if we just go and look up the CNN Fear and Greed Index, it's listed at what, 69? It was 71 the other day, or a few days ago. But again, I do think that we're just in a strange place. And so when we're in a strange place, what do? I go to the charts, because the charts don't lie. And if we just look at a weekly chart, okay, the Liberation Day strategy hasn't gotten us back in. It hasn't. And I think because there's a 2-candle wait to make sure that you're actually in the upward trend, because remember, this is back tested for 9 years. It's not back tested for 24 months. It's 9 freaking years. So if you go back 9 years and you look, where are we back testing to? Right before COVID. Let's see. It is, 2015. January 2015 is where this back tests to. And so you've got all of these major, even the 2022 downturn. And it backtests really well. It makes you 302% versus buying and holding makes you 322. Now, you win 64% of the time. So I've got an alert set up. I knew it was going to be a long time. I thought maybe, but this is the quickest recovery we've ever had. You can't build a strategy that's based on 9 years on a weekly candle, and then all of a sudden it comes back in. I tried to do it. I couldn't figure it out. So the Liberation Day strategy hasn't gotten us back in. So let's go to the 4 hour. Has the 4 hour gotten us back in? Yes, at $438. Where are you right now? 519. I'm sorry, that's 458, not 38. 519. 10% move. I mean, let's just go and see where it is. Right here to right here, 14%. 14% in 23 days. A weekly candle with a 2 candle waiting period is not going to turn around that quickly. That's why the Liberation Day strategy hasn't gotten you back in. But when it does get me back in, I'm going to use that to load back in. I've already started buying. Okay? 14 positions over 9 years, 64% win. So you win 8 times. You win 8 times, you lose 6. I want that. I absolutely want that. So, well, I don't know. You can do the math in your head. My head's not working right now. But we did get yesterday, by the way, a new alpha pick. And you had a shot at getting this one. A few percentage points. You had an absolute shot at getting a few percentage points of scalping because it's a smaller stock. Leading food distributor, 165% up in the past year. The company trades at a discount. Operational improvements have reduced inventory loss to pre-COVID levels. Management's proactive approach. And again, since inception, AlphaPick's portfolio has delivered 161% versus the S&P's 55% during the same time period. 7 out of 35 AlphaPicks have returned more than 100%. I will tell you about this company. It's $1.7 billion market cap. It's got super low volumes, and that's why when AlphaPicks picked it yesterday, it shot up. It soared 7% when it was picked. Just over a few minutes. It's at $30 a share, a rating on valuation even with 34 times forward PE. The sector's at 16, so it is expensive amount of forward PE. But Wall Street has a price target of $30 with short interest of 7.5% and a gross margin of 13% when the sector is at 35%. So again, it's not a perfect stock. There is always risk in the market. But again, you because it was picked at 12 o'clock, if you have your alerts on and you're sitting there, you could have gotten a few percentage points of just, hey, I'm going to get it. It is what it is. So if you're looking, let's look at this. This is the top 10. This is super, super simple. The top 10 stocks according to Seeking Alpha's metrics. And what does Seeking Alpha do? They rate these, and I'm going to take you to HRTG, which is one that I've brought up the past few days. Okay, it's up 33% in the last month. You just go to 1 month, it's up 33%. 6 months, it's up 103%. And it's in the top 10 stocks. When they talk about the top 10 quant ratings, it's this. And so the quant rating is a rating of 1 to 5. You can see it's 4.98, and it rates it on 5 criteria: valuation, growth, profitability, momentum, and revisions. These are all fundamentals of stock. So if you're new and you want to understand it, you can look at the valuation. Go and ask Perplexity how this works, how the quant system works. If you want to just know about it, the valuation, you can click, hover over it, and it will give you, if you just click on it, I think. If you click on the valuation, you can kind of see that. But they do give you a description of how it works right here. It beats the market. See that orange line at the top? This goes back 5 years. This is the Seeking Alpha Quant versus Seeking Alpha Analysts versus Wall Street Analysts versus the S&P. Okay? The orange line, just so you know, is Seeking Alpha Quant. The second line here is I guess a purple. It's Seeking Alpha Analysts, and then the third is Wall Street is S&P, and the last one is Wall Street. That's why you take Wall Street Analysts with a grain of salt. They just don't perform very well. And that's why I like Seeking Alpha. And if you want Seeking Alpha, you can get one of 3 types of subscriptions. The first is the second link right there. It is the bundle. It is the best one. I just told you Alpha Picks performance of 161% versus the S&P 55. You get Alpha Picks. It's a new pick on the 1st and the 15th of each month, and they tell you when to sell. And I'll go over a couple that I sold yesterday just because of Alpha Picks. I didn't sell out completely, but I did trim. And if you don't want the bundle, which includes, the bundle includes both premium, which is the quant, and it includes Alpha Picks. If you just want the quant, you can get that with Seeking Alpha Premium, and that's the third pick, the third link. And you get a free 7-day trial. That's the key. And the fourth one, the fourth link is just Alpha Picks. If you just want to sit back and relax, that's what I do with this portfolio. And they email me. It's nice. It's super, super nice. And again, the top 10 stocks, Heritage is one of them. Go and research the other ones. I like this one. This one has piqued my interest. Now, I'd like to buy it in the 22 range. I think if it gets down to 22, I can do that. I can set up an alert. And you know what? I can put a price in here. And I can put an alert that says price, let's say $22.99. And I can save that. Now, when this price hits $22.99 or below, I will get an alert. It's nice. This is how you use the tools. This is how you don't sit in front of the computer all day and just stare at charts. Now, I did yesterday. I did some trimming. And I'll talk about it because these stocks are in the core portfolio or in Alpha Picks. So the first one that I trimmed was Coke. Even though it told me to buy at $71, I have a tremendous position in this that has ballooned up. And so I trimmed it. I trimmed a lot of my short-term holdings, which is dividend reinvest. And I just trimmed it. Now, that was my choice. And why? Because when I look at a weekly on this one and I see that $60 right there holding up as support, where's the resistance? If I just draw this, we can see a double top at 73. Do I care about $71 to $73? No. Thousands of shares, a couple $1,000. Not going to make my difference. I will buy when it gets back lower. I do think that we are going lower. It's not a super, super strong bull move. MACD is up here on the weekly. RSI is at 60. Could it go higher? Absolutely. But I just decided to trim. And I will buy it back lower. It's as simple as that. I like holding Coke, but as it starts to get bigger in my portfolio, I start to trim those long-term ones. Now, another one that I trimmed, and it was based on Seeking Alpha telling me to, but more just, hey, I'm not 100% sure that this one isn't out of the doldrums because Wall Street is focusing on search revenue on Google. And so I decided to trim this one. Now, it's a top 5 position still for me, but I sold a little bit. And I sold the equivalent of what was in the Alpha Picks portfolio for me. I have like $100 and something thousand invested in the Alpha Picks portfolio. So this was like, a couple $1,000. Nothing huge. It wasn't big. And then the other one that I trimmed based on the Seeking Alpha, the Alpha Picks portfolio was Salesforce. Now, I didn't necessarily want to sell this one. This one I like because the 4-hour algorithm does work in this one and it hasn't gotten me out. But with the MACD crossing down and the RSI at 68, I thought, you know what? It's hitting up against that 200-day. Might as well trim it at 290. Now, I still own this in my Roth IRA, but I'm perfectly fine with this. You know, again, these are my decisions. It's not your portfolio. It is mine. I don't share my portfolio because I'd rather have you manage your money. I give you the tools that I use, and that 4-hour algorithm is a tool I use. And if you want it, get yourself TRENDSPIDER for the weekend. You get a 14-day trial. I think they still have 14-day trials for like $20. But again, these are the monthly prices. And if you want the algorithm, you can just sign up for a yearly plan. That's it. Just email me afterwards. You'll see me use it over this time period. Now, yesterday was 13F filing. Why do I like Seeking Alpha as well? Because I import my portfolio directly from Fidelity. It's an automated process. And then I set up portfolios of quote unquote watch lists. And what's nice is you can see this 8 a.m. this morning with a 90% battery charge on my iPhone. I get an email of all the stocks, and you can see Glenview Capital, 3G Capital, Activist Hedge Fund Value Act, SoftBank buys, Third Point, Ackman's, Bank of America decline as firms disclose positions. Again, it's all in here. And so I know exactly which big hedge funds have gotten in and out of stocks that I actually own. That's why I like it. Because I don't need to go searching for information. I can just click on these links and go through it. It's super, super fun. And it's easy. Now, if you don't have Seeking Alpha or you just want to know, let's go over what Buffett did. He exits Citibank, which I think is crazy. I do think that financials do get a leg up, but Buffett knows more than I do. And again, he exited Citi completely. This is one that the book value is super, super low. But most likely, Buffett bought in the 40s. And this is trading at $75. $75. It's an $80 stock. And then you're going to see it pull back. So he probably sold up in the neighborhood of like 60 or 70. He knew. Then he cut Bank of America. You know, the big thing is he retained his Apple position. I'm going to go over my notes. He retained his Apple position at 300 million shares due to valuation risk and portfolio balance. His continued selling of Bank of America seems to have more serious doubt about the stock. And he cut Bank of America. I still own Bank of America. I said buy this one under 40. Do I think it's a $50 stock? I do. But he trimmed his stake. It's only at 44. I think it gets back up to 50. He doesn't time his buys. He doesn't. Apple remains 26% of Berkshire's portfolio, and while future growth is likely modest, the cash flow and dividends he loves. Buffett aggressively reduced Bank of America holdings, eliminating Citi, reduced Capital One. He doesn't believe in the financial ones, suggesting deeper concerns about the banking sector beyond simple position sizing. The fact that Bank of America fell from the second to the fourth position in Berkshire's portfolio, he does not see a future dividend stock like American Express and Coca-Cola. Remember, he loves dividend stocks. He loves compound growers. He doesn't see Bank of America in that one. So if you're going to follow Buffett, just buy Berkshire. I mean, just buy Berkshire. I've learned that lesson over the years, number of times. I bought into Oxy like he did. I made some money. I was fine. I didn't stay in there for the long haul like he has been. But again, if you're just going to follow Buffett, just buy Berkshire. Now, value play, Constellation Brands is the one that's rallying because Berkshire doubled its stake in it. STZ, it's up 3.5% after being up 2% yesterday. And we can look at this one. This is a drink brand. And they are the leader, by the way, if you get into hemp and pot drinks, these are the guys you want to invest in. Now, the algorithm just got you out the 3% gain. The algorithm doesn't work on this one. It only wins 34% of the time. It loses you 16%. That's pretty good because over 2 years, you lose 17%. And is this a value play? Well, look, it has dropped down incredibly. He doubled his stake. He doubled his stake in it. And if we go and look at it, it's a hold in the quant. Why? Valuation is bad, growth is bad, and the Wall Street revisions are bad. Momentum is even bad. The only thing that's good, profitability. Now, if you'd like to know more about it and just read an analyst report on it, you get an analyst report right here in Seeking Alpha. Valuation, challenging metrics. Its price to sales ratio of 3.8 is slightly higher. Growth, mixed, while the annual dividend growth, 13%, is higher than the 4%. The revenue growth forward at minus 1% lags behind the sector 3%. Profitability, it's great. EBITDA margin 39%. Momentum, it sucks. 1 year performance down 27%. He might be going just value shopping. Again, research what it is. I don't drink alcohol, so this isn't like my big thing, but Buffett doubled his stake in that one. It could be a value play. David Ihorn's DME takes new Dollar Tree stake, exits XRT, RSP among Q1 moves. Does that signal something? Again, the big money typically knows something or thinks they know something. They're just staking their claim. Saudi Wealth Fund, PIF, boosts holdings in BE, which is Bloom Energy. Amazon exits BLDP, which is Ballard Systems. Interesting plays. Again, interesting plays. Bridgewater adds new Netflix, UAL stakes, exits 3M, Amgen, among other moves. It boosted its position in Alibaba. I saw that David Tepper got out of his China positions. They unwound them. So completely opposite. Jana Partners adds Freshpet, exits Wolfspeed, among other move. Wolfspeed is the one that I think that's one of those. I think it's got to do with crypto and stuff like that. But that's one. Engaged Capital Q1 moves includes new stakes in Yeti. I mean, do you like Yeti? Not my thing. But again, that's Engaged Capital. And Michael Burry Scion lightened up on healthcare portfolio. He owns one stock. He owns Estee Lauder. I mean, he owns Estee Lauder. This is a guy who's, been right one time, I think. I mean, he runs a hedge fund. Estee Lauder is what he got. Estee Lauder, if you look at this stock, is it value? Is it on the rebound? For me, this isn't one that I'm particularly looking at. The valuation sucks. The growth sucks. The momentum sucks. Profitability is good. The revisions are okay. Maybe it's coming back. $67 is the Wall Street price target. They've chased it down, certainly. But has it reached a bottom? I don't know. That's an interesting one. Soros Fund adds Redfin, Las Vegas Sands, exits Alibaba. Another exit of Alibaba. I mean, maybe people just aren't that big on China. Seth Klarman's Baupost adds FIS, which is Fidelity Information Services, SGI, and dumps SNRE Humana. I mean, just healthcare has gotten killed. Remember, all of these are past events. So we don't know what their portfolios look like today. These are all past events. And I do want to point out one in the core portfolio that got an upgrade is Exxon. Ooh, it went directly from hold to strong buy. Could that be signaling a move? It's number one in the quant. Again, 4.68 out of 5. Its valuation, little bit expensive. For energy, that's expensive, but you're paying for best of breed. It's number 1 out of 17. Okay, so Suncor, I don't even want to, Brazil, this one has been on a run, I believe. It was on a run, but I guess now, 5 years, it's up 90%. So, but again, Exxon is the one in the Quant that I like. It's in the core portfolio. It's a solid stock. And in healthcare news, we're going to go into healthcare a little bit because, today I may be a healthcare expert. But this is huge. I mean, this is big. CRISPR I used to follow, and I used to trade this one a lot because it has high volatility. But this was a baby. Is given first the world's first personalized CRISPR therapy. This is what AI is doing. And the reason I knew about CRISPR is only because I used to trade and own ARKG. This one is Kathy Wood's ARK fund for genomics. And so during this time, 2018 to 2021, I actually traded this ETF. I mean, it was very, very good to just buy and hold through that time. I first found it in 2018. I think it was like April or something. $25, and it goes all the way up to 100 within a couple of years. So it was good. I wasn't in it during this downturn. I did wind up selling, I think, at about $80 or something during this first April, the first part of 2021. And so I got out. I just saw the weakness and I said, you know what? I'll wait to get back in. I just never got back in. You want to see a big one, by the way? Talking about healthcare, UNH. UNH, just to give you an idea of this massive downturn. Okay, we talked about that 450 being support. It broke right through there within a week. UNH lost $337 billion in value over the last few weeks. That's an entire Bank of America. So if Bank of America goes from $44 to zero, that's what United Healthcare just lost. An entire company, a major bank that's too big to fail. That's what they've lost. Is it one that you could get back into? I don't think so. Where do I think we're going? I think you're going down to this probably right here. I would say 220 level. That is where the 200-day was at the COVID low. That would be my guess is where you would go. I mean, right now, there's no way I'm trading this one. In the pre-market, it's up 2%. Do I see a full rebound? No. I see more trouble ahead. And so I'm staying away from it. You can do what you want, but I did get people asking me about that one. Now, let's talk about the S&P. So the S&P earnings for this year are expected to be $250. We know that if you just do 250 times 20, 20 times earnings, let's see. What's 250 times 20? 5,000. So that would put SPY at 500. We're trading at a significant multiple if earnings come in at 250. Now, what's 300 times 20? That is 6,000. That would be where the S&P would live at a reasonable multiple, historic multiple in 2026 if the earnings come in there. Okay, so anything higher than 6,000, you're trading at a higher multiple. It doesn't mean that it won't continue to go higher or that earnings might grow higher than 300, but that's the estimate right now. So when you're trading this, just keep that in mind that 6,000 level is probably next year's earnings unless they grow or unless the multiple grows, because if we are in a bull market and things just start moving, it can go significantly higher. But right now at $250 per share earnings at 20 times, you're at 5,000. So I think you're between that 5,000 and 6,000. Do I want to buy at 590? No, I bought at 580. I'm perfectly happy going into next year at 580. Do I want to buy at 590? Nah. I mean, just for me, again, I'm looking at this. I would rather buy Berkshire at 500. Then the SPY at 590. So, and I didn't buy SPY. I bought VOO. That's just my thing because, again, I like it. Now, Boot Barn. Boot Barn was yesterday's huge winner. And so as it was going up and I was looking at it, I said, let me look at this one, because is it one that I really want? And the answer is no. But we talk about gap fill all the time. This one's filled that gap all the way up there. It was a tiny, tiny gap from the last earnings. And what does that look like? Well, look at the trading desk. I brought it up before. Trading desk has a gap from the past earnings, and these guys had good earnings, and it's going up to 120, and you're trading at 77. So I like that. Boot Barn, 10% short interest, up 16% yesterday, and it's up 60% in 1 month. Trading desk, I think, is trading very similarly, and if we can get the entry into this gap at 84, I think you start to see that gap get filled. Don't know if it's today, don't know if it's tomorrow, don't know if it's next week, don't know if it's next month. I don't know if it's September or October. But I like this one to keep an eye on. So I've got alerts set up on this one in Seeking Alpha. And I don't have one set up right now in TrendSpider, but I will. But another one that I saw is MicroStrategy. And this was interesting to me. And I put down this note. MicroStrategy is under 400. Do you want to trade it? It's in the 4-hour algorithm. And then I see this note. Not sure anyone has been watching MicroStrategy, but it's coiling up for a massive move, in my opinion. Sideways on declining volume is so bullish. He got in with calls. Okay? I'm not a guy that does calls. And the other thing I want to do is I want to trade this on the 4-hour algorithm. Because it doubles. It almost doubles. 2,233% gain versus 1,240% gain if you just bought and held. You win 43% of the time. That risk reward is fine for me. It is coiling up, like you can see, sideways. And the volume is declining. That blue line right there, it's declining. But do I want to enter this one? Not really. I'd like to wait for an exit and then an entry. That's just my thing. The risk reward for me is a little bit more. Now, I don't know. Maybe this one's going back up to, let's see, the all-time high at 542, and you're trading at 100, at 400. Maybe it's going up there. Because you can see the MACD's clearly moving. You can see the weekly candles have confirmation. You can see the Bollinger Bands have cinched up. Where would the move be? My guess would be up. I just don't feel comfortable with it. Again, going back to the beginning, do you feel comfortable in this market? I don't. But others are noticing that MicroStrategy move as well. And while I gave up on Microsoft, I did a whole long thing about the Mag 7, I guess about a month ago, and I said, Microsoft, they're just not doing anything. Earnings were really, really good. The bottom line is that Microsoft trading at 29 times for gap earnings. We continue to believe that the share offer an attractive risk reward for long-term investors, said Evercore analyst Kirk Materne in a Thursday note. After dropping to a 17th-month low in early April, shares have surged. They have surged. And if you look at this, it just wasn't even fair. I mean, again, the algorithm got you in here at 385, and then you gapped up on earnings, and you've continued to rise. Am I buying in here? No. But as it gets down towards 400, yes. I think you're going to see it bump up against 460. Now, here's the thing. Microsoft, the Wall Street analysts who all have a strong buy on it, they think it's worth 507. That's a good move. That's 12% upside. So if you don't have a position in this, I would wait for some type of pullback, but I would add it to your watch list. It is doing really, really good things. So, how do you become a millionaire? I mean, this is part of the education thing. Humphrey Yang did a fantastic job. There's 4 pillars. And this is basically 3 or 4 people who were janitors. who were janitors. They literally were janitors making $13 an hour and retired with $8 million in the bank. So it doesn't mean that you have to have a large income. It's more about lifestyle. And so again, 4 pillars, I think you should take 13 minutes out of your day if you want to retire early or if you want to build wealth into retirement. This is a great, great video. And it's just common sense. It really is just common sense. And from another investing perspective, you're listening to the podcast, so you probably know, hey, go and look at these companies. Okay, I want you to look at this slideshow because back in 2021, these were the hottest stocks out there. It was GameStop, it was AMC, it was Peloton, and it was Lucid. And everybody thought, oh my God, these are the next big things because GameStop, nobody even knew. There were meme traders who were just trading. AMC, same thing. Adam Aron was out there promising the world. He is the CEO of AMC. And he knew exactly what he was doing because every time that stock popped, that dude as CEO would just dilute the shareholders by just issuing more stock and gaining more money. That's what they do. Peloton, it was a doomed brand because they didn't pivot from when COVID happened to post-COVID. And Lucid, car business is just a tough business. Now, my neighbor's got a Lucid. It is by far one of the most luxurious cars I've ever ridden in. But if you look at this slideshow, the lesson, chasing hype isn't a plan. Short term, you might get lucky, but hype always eventually fades. And when the dust settles, only the fundamentals survive. Fundamentally, none of those companies make sense. Now, I will tell you, Palantir doesn't make sense either. But Palantir has a story. None of those others really had a story. If a company doesn't have profits or staying power, its stock will expose it eventually. Most people see a crash and run. But the smartest investors study the wreckage and look for signs of life. They spot the comeback stories before the crowd catches on. The good news, you don't have to choose. Build your foundation with index funds, blah, blah, blah. And that's what I always say is VOO and QQQ. 7 popular ETFs right here, down in the bottom right. VOO, VGT, QQQ, VTI, VT, VXUS, SCHD. It's all there for you. It's all there for you. So understand what you're getting yourself into. And I will tell you, there is a stock today that is up 48%. Now, how do you go and evaluate something like this? Because it's not covered in the quant. It's not covered by Wall Street. This is TSSI. This is a AI rack-mounted rack company that basically procurement services remains robust. They are seeing 50% year-over-year adjusted EBITDA growth as an AI rack company. Well, let's look at it. Again, it's AI, but it's not covered by the quant. Okay, so how do you look at something like this? Well, first off, I will tell you, it's got 8% short interest. Anything more than 3% is typically a high percentage. But the other thing is the market cap. So market cap is a big deal because the smaller the market cap, the bigger that it has to grow. For instance, I always say NVIDIA, it's a $3 trillion market cap. There are only 2 other companies that have a $3 trillion market cap. That is Apple, Microsoft. So it's one of 3. And just a few years ago, the market cap of $1 trillion was thought to be just unrealistic. And Apple was the first one to get there. Apple was the first one to get to 2. Apple was the first one to get to 3. So understand that this is a small cap stock. The other thing you want to look at is the volume. 2,791 shares. If you look at that volume, it spikes. Okay? You could get caught in a situation where it can't fill because there's not that many shares trading. But how do you look at something like this? Use the tools that you have. Go and ask Perplexity. Go and look at the valuation. The PE for the trailing 12 months is 36. That's pretty high. So do you want to buy into this one? I don't know. The growth is 172% year over year. That's fantastic. The profitability, they've got 15% gross margins. The sector is at 50. Momentum, it's got decent momentum, but in 3 months, it's down 43%. 9 months, you're up 172. 1 year, it's up 593%. And you can just look at that on a chart. TSSI, you can just look at it on a chart. Let's go and look at the 4-hour algorithm. Does it work? Loses you 1%. That's bad. The good news is if you bought and held it, you're down 24%. But look at that spike and the gap that's created. Now you just got your 200-day. It's a newer stock. So we probably don't have a lot on the here. No. I mean, you just, that's a weekly chart of it. And you can see how it gapped up here from 14 cents all the way up to $7 in that one freaking week in November 2024. But again, understand what you're investing in. And that's the key. If you want to trade something just from a momentum standpoint, you can do it. Have a plan and pick a strategy that works. Something in TRENDSPIDER, like this 65-minute on this one, okay? This one gets you in and out on 65-minute candles. Over the last 6 months, you've made 31%. Buying and holding has lost you 25%, but you've made 31%. Now, it doesn't have you in. It got you out with the candle right before this, which was crazy. But understand, over those 6 months, you've traded 67 times. So that's 10 times per month, at least, if not 11. So you got to know what you're trading. You got to know what you own. In a market like this, if we just look at the Qs and we go to a weekly on the Qs, I'm going to go back to the 4 hours so I don't get stuck talking about that. But if I go to a weekly on the Qs, you can see we're up near the highs. We just passed the 50-day. Does it feel comfortable? Not as comfortable as it was here in 2024. I mean, I just don't feel, when you can get taken down with a tweet, I don't feel comfortable. But when you look at the indicators on the weekly, the MACD is still below the oscillator. Okay, the strike line, it just crossed up on the strike line. So this is a bullish move. I do expect a pullback. I don't know when, but I do expect a healthy pullback. This rebound has been too fast, too far. So expect something. If we get empty store shelves later in May, maybe that's the catalyst. But again, have your tools ready. Any tools that you need, it's here on Linktree. And one of the tools that I have, by the way, is Webull. I have a little trading account that I put $1,000 into, and we can look at today. Where am I today? 11,700. Okay. It's a good. Listen. At the end of the day, I'm perfectly happy trading in a smaller account and making money that way versus actually risking my larger account. I'm smart enough to know that my larger account is buy and hold for the most part. I will trim in and out of positions on that one. But if I want to go into TQQQ or SQQQ to time the pullback, I'm going to use my smaller account and I'm not going to put in a position that's going to make me poor. And that's how you protect it. Now, I'm not the best at that, but it's just one that I have. So if you have any questions, hit me up. Linktree, not only can you get that, you can get Verizon, my Visible phone service. I save you $20. This is the service that I have. Check out our plans. $25, $30, or $40. I'm on the $30 plan. I'm perfectly happy with the $30 plan. I think I pay $30 a month. So it's out there. AT&T, I use fiber internet in my house. It's all there. Want to buy a Tesla? It's all there. Follow my trades on Savvy Trader. This is the core portfolio. It's free to follow. And if you look at it against SPY, I'm beating SPY. 48% versus 35% for its max. You go over 1 year, and I'm beating SPY. No, I'm sorry. SPY has overtaken me. I think it was the UNH trade that I did over the last year. Year to date, am I up? Nah. I mean, I'm down 0.97. SPY is up 0.26. But again, long term, I'm winning. So if you have any questions, hit me up. Okay. Talk to you later. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in still my hopes and fears.